let's talk about monopolies a little bit, because you talk about a concept called monopoly wealth, and you also measured it. By 2019, you found that roughly 3/4 of the value of all U.S. stocks was monopoly wealth, and so I think that can be a kind of hard concept for us, newbies and neophytes to understand. Can you walk our audience through what that actually means, and especially in the context of their own lives or 401ks, for example?
Right. Think about it this way. A company sells you a product, which is now just hypothetical. I mean, a product like this does not exist, but hypothetical product that uses only U.S. inputs, no import goes into it. Okay. It's something that only is corporate America goes into it. Okay. Think about the total value of this thing. So that value gets divided. After the creation of value gets divided between labor cost and capital cost. And what I'm telling you is, when you're buying this for $1, about 24 cents of that is monopoly profits. Is somebody's monopoly profits. Now, that monopoly profits appears in the statement, in the annual and the quarterly statement of these companies. And the stock market capitalizes this, because it goes into the stock value. The stock valuation then incorporates the expectations of future capital monopoly profits. That amount of the value which is above what it would have under competitive conditions, I call monopoly wealth. So monopoly profits is the part of income which is obtained as a consequence of having a monopoly power, and monopoly wealth is the capitalization of that in the stock market, when it was incorporated in the value of the stocks. Now, I estimated that in between 1980 and 2019, the total amount of monopoly wealth that was created was $25.1 trillion. My friend Zuckman tells me that he found that there are 9 households in the United States that have made $1.8 trillion in the last 2 years. And my back of envelope calculations show that amount today, the total amount today, between 1980 and today, is close to $35 trillion. $35 trillion of monopoly profits, monopoly wealth that was created in the U.S. corporate sector.
So most stock market wealth then comes from that monopoly wealth, not productivity. And so what does that actually tell us about what we're saying when we say the market is up?
Well, but the market is up sometimes because we are able to make more monopoly profits, because we continue. I mean, these firms are doing extremely well because they control phenomenal technologies, and they are able to charge whatever they want for it. So it is essentially a situation where they to charge whatever the market will take. And at this moment, it's a general exploitation, capital exploiting both capital and labor. This is the exploitation here, both goes both ways. I'm not a Marxist. I'm against Marx. Marx claimed that labor is being exploited by capital. This is not true. In the modern world, it's technology that exploits both labor and capital. So, by the way, I mean, the amazing fact is, to my mind, the most amazing fact is that there are, in the United States today, there are about 950 billionaires. 80% of them made their money in their own lifetime. Think about the speed at which this is being accumulated. In other words, the only way you can accumulate $200 billion in one lifetime is by creating some monopoly of some sort. You can't do it if you just earn 6% on your investments. You can't accumulate $200 trillion, $200 billion in one lifetime. It's not possible.
It is impossible.